So let's move down to the US and let's look at the San Francisco market. Back in 2010, we had been active in the Seattle market. Mark Hanna, who's standing in the back here, has been with us right from the beginning. He's got an incredible nose for deals, is able to source through networks of relationships, which are really important in our business, and through just a lot of experience at looking at thousands of deals and putting billions of dollars of real estate together. He came to me one day and said, Wayman, there's these buildings in San Francisco, they look like they're for us. I'm going to hop on a plane. I want to go down there and have a look at it. And he hopped on a plane, went down there, and met with the guys, toured the buildings. They'd already been through the first round of bidding, and Mark convinced them, as only a really good realtor could do, that they should really be dealing with us and they should let us into the second round of bidding. Sure enough, we got into the second round of bidding, and we were able to acquire these two buildings, which are in what's called South of Market, the Soma area. It's a phenomenal location. These buildings were acquired in November 2012 for $25.75 million. It was 100% leased. In-place rents at the time were $34 to $37 a square foot. Remember that number because I'm going to come back to it here in a sec. Why we liked it? It was giving us diversification, which is one of our values, into another market. It was opposite a $4.5 billion Transbay terminal, which is the major transportation hub, which is under construction, which is not going to be completed for another couple of years. They'd been substantially renovated. It was a stabilized asset, strong economic fundamentals in the San Francisco market, and particularly a diverse tenant mix and below market rents. So we looked at it and said, this is something that I think would fit well, complement our existing portfolio, and give us those stable rents that we're looking for with some upside, even if the market doesn't continue to move at the pace that it was moving at the time. How has this asset performed for us? Well, again, there's always stories. We bought it in November 2012. December 2012, we get a phone call, and there's a water line that's broken under the streets right out in front, which created a flood in the basement because both of these buildings had below ground basements. So stuff always happens, particularly when you've got properties in a number of locations. But what's really important is that you've got teams on the ground that really know what they're doing and can respond and react and be very proactive with responses that look after not only the tenants, but look after the buildings well. So our asset management team, headed up by Christina Lang, who's also here this evening, was right on top of it, looked after that. Not right after we dealt with the flood, we then had one of our tenants who said to us, well, our business is so good, we need more space, we're going to have to leave. So we now have a tenant that wants to leave us shortly after we'd closed, but before we signed to let them off, we had a new tenant in place at $51.50 a square foot. Remember, I asked you to remember that lease rate. It was $34 a square foot, up to $51.50 a month after we had closed on the property. A year later, we had another tenant that we renewed, and that lease went from $37 up to $57. And we have two leases that are expiring next year, and we're anticipating those rents to go into the 60, maybe up into the 65 range. So we've had good leasing activity. We've had value add. When we purchased this building, there was something called TDRs, which are transferable development rights. We didn't put any value on them, but shortly after, in the next year, we had somebody come to us and say, we'd like to buy your excess development rights. And we managed to convert that into $564,000, which wasn't in our original underwriting, and improved our returns. So what's happened? One of the things that we do is we value externally all of our assets every year. This particular asset, if you remember back, we bought $25.7 million. We had it appraised this summer for the annual appraisal. Value came in at $34.4 million. If you're an investor in Spire, the NAV went up about $3 last month. That increase in value was a 34% increase since acquisition. It's 36% or $9 million above what our underwriting was when we crystal balled and put our 10-year projections for this asset when we acquired it. And it's given us over 50% IRR. So the question that we asked for the Edmonton retail, we ask again, because we're always asking those questions. We've got some of John's inherited paranoia. What are the risks and what are the opportunities? If you read the papers, there's risks about San Francisco. They're saying, you know, the lease rates have peaked. They're above the previous highs. Free spending of startups. It's got to crash. But then we're also seeing that the tech employment, the movement to something that we think is really important as we're looking not only at our own assets but future assets, is what we call live, work, play cities. People are wanting to live and work and play in dynamic urban settings. San Francisco is one of those places. So we look and say, is the run over? Is there more opportunity? We talked about leases that are coming due next year. We think that there's more upside. We look at this Trans-Bay development that's right across the street that's going to be completed in the next couple of years. We look at who our neighbors are. Recognize any of those names? They all want to be in the south of Market area. They're our neighbors. And in fact, we also have the incubators who are in this area. So we think that there's real strong demand. We think that there's still some legs. So when we ask the question, would we buy this asset today? The answer is yes. It may be a little bit expensive today, but we really like being in this market. We've got a presence here, we've got a team here, and when the right opportunities come along, we'd like to add more assets in San Francisco. So this one, to answer that question, it's going to stay in our portfolio, but we'll keep asking that question every year as we go forward.